이어서 저희 다음 발표 만나보도록 하겠습니다. 이어지는 발표는 자본시장 토큰화의 가치 측정이라는 주제로 글로벌 세틀먼트 네트워크의 카일 솔린 대표님께서 준비를 해주셨는데요. 대표님 무대 위로 모실 때 여러분 다시 한번 큰 박수 부탁드리도록 하겠습니다.
Good afternoon, everyone. Thank you so much for being here. Thank you to the Korea Exchange, as well as eDaily, Flip, the many members here in Seoul that have invited me to attend and speak on behalf of tokenization in capital markets. I am really happy to be here. It's my second year here in Seoul at the STO Summit, and I look forward to many more. So, the main conversation that I want to have here is about tokenizing and qualifying and quantifying the benefits. But before we get into that, about me, I'm based in Miami, Florida, the USA. I'm honored to be here in Korea. I'm building a business called Global Settlement Network. We are a layer 1 blockchain specifically focused on stablecoins and commodities tokenization. That involves gold, oil, natural resources, and many of the very, very important drivers of GDP for emerging markets around the world. And I think that especially in the age of AI and emerging technologies, many of these rare earth metals and the energy sector will only continue to be a driving economic opportunity for countries around the world. Before that, I built a private market index security token market, which tracked and monitored over $25 billion worth of assets, including equities, real estate, and debt financing. I also am the author of a book, Blockchain Explained, which recently was given the bestseller title in the business law category in the US markets. This is now course material in many universities in the United States. So, why tokenization now? I don't need to spend too much time on this. This is the second day of a fantastic event. Many of you likely know many of the benefits of tokenization. We've got $50 billion worth of assets tokenized today in the real capital markets infrastructure. We now also have significant advancements in regulatory framework. This is no longer something off to the side. It is no longer a totally emerging technology. We are for the first time seeing it blend into the traditional markets as we know them, with the Genius Act in the US, with MiCA in the UK, and many other regulatory frameworks around the world. Not only that, but many of the world's largest firms are getting involved here, building their own blockchain networks, tokenizing their own assets, and utilizing this technology for their traditional business models. What does that actually mean, though? Well, before we do that, let's talk about the market growth. One thing that people may not realize, even about stablecoins in and of themselves, is that the private companies that issue stablecoins, including Tether, Circle, and others around the world, now represent the 12th largest foreign holder of United States debt. And that's growing. Many of the largest holders of US debt have questioned whether they want to continue an aggressive allocation strategy. Stablecoins have grown significantly, nearly doubling this year. And that is a strong driver of US government debt. So this market is only going to continue in growth, and in increased size, it increases the relevance and the political pull that these types of technologies have within the capital markets infrastructure. That being said, the key question is, why do we need a blockchain? Why tokenize? It's a question that companies have been trying to answer for a decade, 15 years almost at this point. The real answer, in my opinion, lies in two places. They both revolve around quantifying the benefits financially for a firm that is participating in this market. Either the technology will increase profitability within your business model, or it will reduce the costs associated with your traditional business. You're either going to increase the top line revenue, making more money, whether that's through acquiring new clients, whether that's establishing new business verticals, or it's in optimizing your existing business processes, doing things more efficiently so that they are cheaper in raw cost or faster. And as we know in the capital markets ecosystems, time is money. One example of this that my business partner, who did a wonderful job speaking yesterday, he and I shared a fireside chat as well, Ryan Kirkley. Our business, Global Settlement, recently completed a large leveraged buyout. It was the first in this particular country in Latin America. I'm unable to share the name as per regulations, but this is a South American country that really does not have much access to traditional capital markets infrastructure. And thankfully, not only were we able to bring that country into the digital age, we were able to help them coordinate with investors across their region in other countries using stablecoins to do so. Traditional banking processes would have what we call in the US a daisy chain, a connection of a variety of different banks that coordinate to move money from one place to another. But what that means for a traditional company is that each one of these firms in between takes a cut of the profit and they add additional delays. In transactions, delays and added costs are a killer to momentum, and they halt progress. This was a key deal, not only because we were able to help coordinate this process, but as I mentioned, I do believe that energy sectors and the commodity sector is the biggest opportunity in going into 2030. Providing resource and capitalization opportunities for infrastructure is a game-changing revenue stream for investors, as well as an opportunity for emerging markets who traditionally would be taken advantage of from the larger firms that have a monopoly over this particular type of investment deal. Now, we can offer these opportunities to investors around the world in a streamlined and efficient way. Example number 2, something else Ryan and I have been working on, is in the trade finance industry. I'm incredibly bullish on private credit. This is a market that has grown tremendously, but I particularly am interested in the trade finance sector of private credit. We see a lot of money market funds that are growing in the US and internationally, buying government treasury debt. I would expect this to expand past the United States into other jurisdictions. The problem is that these debt vehicles are based on outdated central banking policy. We have seen inflation across the world. Central banks are not necessarily equipped to handle the modern age. That being said, providing debt structures that are no longer backed directly against fiat, but are backed against particularly rare or valuable resources, I see as a much more sustainable opportunity for growth because it provides a much stronger and sustainable backstop for these debt vehicles. The benefit of using tokenization for trade finance, in my opinion, is on the turnover. The turnover rate on your currency is defined as how quickly can you get that currency to complete one cycle of a transaction. If you're financing the export of a natural resource, we do a lot of work with gold in Africa. If you're moving this gold from Africa into Dubai for an offtake agreement, the speed at which you can move that capital to purchase the asset and then get your capital back from the sale of the asset so that you can complete the process again, that is the difference between a successful business and a failed business. Because the reality is, in our experience, it takes much longer for the money in a traditional bank wire to be received and completed in this process than it does to actually send the physical product on an airplane. Because of that, if we can speed up this financial process, we stand to gain significantly as an economy, as a country, as a world, in modernizing and improving our supply chain infrastructure, starting with the financial infrastructure, which not only provides more efficient and sustainable systems, but a much more profitable investment opportunity, which attracts more capital into economies with a lot to provide. The final example, which we've all seen quite a bit, is money market funds. In our first example, we talked about stablecoins, speeding up the process, reducing compliance overhead and cost. In the second example, we talked about reducing the turnover rate to increase profitability. In this case, with the money market funds, the reason, in my opinion, that many of these funds are creating tokenized investment vehicles on chain is for increased distribution, which for them is monitored or measured with a lower cost of capital. They are able to acquire more customers, more investors from around the world by bringing these products into an on-chain environment than if they were to keep them in their traditional distribution networks. This is purely a math equation. How much does it cost for me as a firm to acquire $1 million of liquidity? And a firm is going to go to the place where they can find that the cheapest. As I mentioned, the three value drivers of tokenization. When we talk about quantifying the benefits of tokenization, why are we doing this outside of the evangelism of it all? Is that we can create lower costs of capital, we can drive higher revenues by accessing new markets or doing things faster, and we can save money while doing it in administration, auditing, and account management. So, how do we apply this framework? Well, you just have to think to yourself, as we've seen so many great firms that have talked and spoken and had wonderful discussions around these opportunities, we have to think about, does tokenization reduce the costs? Does it increase the turnover ratio? Or does it automate operations in some way? Because there's obviously going to be overhead. There is friction associated with using new technologies. It's not as easy as flipping on a light switch. You need to convince your investors how to use a new system. You need to bring the capital into the digital economy and potentially bring the capital in the digital economy back out into the traditional economy in order to complete a particular deal. So we need to weigh the benefits of these applications on the capital markets infrastructure that we're providing, on the products that we're providing, on the solutions that we have. Why are you tokenizing? Does this reduce costs, increase distribution? How do we prove that? How do we quantify that? And if the answer is yes, then we can say there is a quantifiable benefit to using this technology. It's why I put a main focus on stablecoins. Stablecoin infrastructure exists today. Hundreds of billions of dollars exist in this ecosystem today. There is a liquid market to facilitate transactions, to do deals in a cheap and cost-effective way, and it's only going to be growing. On top of the 3 ways that I discussed here today, there is one additional potential benefit, which I call the post-issuance services. The beautiful thing about tokenization is that we are standardizing financial products across the board. If you're tokenizing intellectual property, if you're tokenizing real estate, if you're tokenizing a money market fund or an equity, you're on the same rails, which allows for gamification. It allows for utility. And so because of that, we've seen great examples. Spice VC, one of the most successful venture capital funds in the blockchain and tokenization economy, led by managing partner Tal Elyashiv, a friend of mine, has done 3 distributions of their fund on chain. What does that mean? For them, when they pay out distributions to 50 or 100 LPs in their fund, because it's on chain, they don't actually need to do individual distributions to those people themselves. They can use smart contracts to handle pro rata distributions as per how many tokens that you have. And you then receive the dividend distribution automatically, and then a fund administrator, can then provide the tax documents accordingly. On top of that, we have the St. Regis in Aspen, Colorado, in the US. This is an equity, a holding company that owns a marquee hotel property in Aspen, Colorado, in the United States. This is one of the most successful performing tokens on the market because they offer strong financial statements supporting the health of the company, and they offer benefits. If you own 10,000 US dollars worth of shares of the property, you get discounts at the hotel. So they've successfully tied loyalty for customers with investor equity. Combining the consumer and the investor is something fascinating that has been drastically underserved in the market today and is a tremendous benefit in building the health of the distribution system of the assets that are being brought to market. As I say here at the bottom, I truly believe, and we have examples of this, that tokenization strengthens investor-issuer alignment. Tying your customer, your user, and your investor closer together builds a more healthy, more sustainable market, which I believe is better for everyone in the economy together. As a final summation here, from an investor perspective, if we view this from that perspective, what do limited partners actually care about? If someone is going to buy your product or service, if somebody's going to invest in your business, they care about returns that are better than where they can get them somewhere else. So does tokenization allow you to offer higher returns than a product in a similar vertical that is not using tokenization? Does tokenization allow you as a firm to acquire capital for your business cheaper than a similar firm that doesn't use tokenization? Can you offer better liquidity? This final graphic was tough for me to decide whether I used an up arrow or a down arrow because we want increased liquidity, but we want decreased lockups. So I went with up for increased liquidity, but decreased lockups is a core component here in the future as well. Making it easier for an individual to redeem their shares, redeem their dividend yield, transact within an economy. These things are really important. And so as I say here in this box, if the ROI, the return on investment, is not provable, the reality is it's irrelevant to real investors. We're building the future with global settlement. We build payment protocols for governments, for issuers, for banks and institutions all around the world, allowing for payments internationally, for financing real change in the real world. Thank you, everyone, and I really appreciate your time today.
네, 카일로스 설린 대표님께서 이 자본시장 토큰화가 단순히 발행 단계에 그치지 않고 발행 이후에도 발행자와 투자자 간의 이해관계를 더욱더 긴밀히 연결하고 앞으로 더 강화해야 된다라는 점을 강조해 주셨습니다. 자, 오늘 발표 내용을 기반으로 혹시 플로어에서 궁금한 부분 있으시면은 질문 간단히 받아보도록 하겠습니다. 혹시 질문 있으실까요? 네, 질문 없으면 대표님 여기서 보내드리도록 하겠습니다. 여러분 다시 한번 큰 박수 부탁드리겠습니다.